A shipyard dock in La Spezia, Italy, July 2022. The largest yacht San Lorenzo has ever sold in Asia sits finished, fueled, and waiting. $50 million of boat named after a dog meme. Much wow. The buyers never board it. The month it was due for handover, their company filed for liquidation on the other side of the world. That summer, the man at the center of this story said a sentence you should hold on to. We met all margin calls. 2 court documents say otherwise, you'll see both. Somewhere behind your savings is a lender. That lender has one borrower it never questions. One name that moves money out the door without a second phone call. This is what that borrower can do. 4 years on, nobody in this story has been charged with a crime. And the man at the center will tell you, on camera, that prison was the best sleep of his life. By the end, you'll know how 2 traders got an industry built on not trusting anyone to hand them $3.5 billion on a handshake. You'll know which of the collapses you've already watched documentaries about were theirs and which weren't. And you'll know what the biggest bet of it all was worth by the time someone finally counted. San Francisco, 2012. A kitchen table, 2 laptops, and about $1 million. Suju and Kyle Davies met as teenagers at Andover, a boarding school that produces presidents. Both passed through Credit Suisse. Both decided the real money wasn't in having a seat at a bank, it was in noticing what the banks got wrong. Here's their trade, told to you like a bar story. Banks ran electronic desks quoting prices on emerging market currency bets. Brazil, China, Korea, India. Sometimes those quotes went stale. 3 Arrows' whole job was noticing first and holding the banks to their own numbers. Find the counterparty's error, make it pay. That's the founding skill. And you'll see it again later in a very different costume. The fund doubled in its first 2 months in a market where banks pay entire floors of people to stop exactly that. Within 3 years, they had 35 employees and were trading up to 5 or 10% of the daily volume in some of those currencies. A kitchen table was moving national markets. Then the banks caught on to what kept happening to their own quotes. One desk canceled their trades, another cut them off, then another. By 2017, the professionals had done the boring adult thing. Withdrawn trust, 1 desk at a time, until the game was dead. Remember the pace of that. 5 years, desk by desk. Banned from the market they'd beaten, Joe and Davies needed one where nobody could ban them. And in 2017, one was minting itself. Crypto in 2017 was a market with no risk desks, no blacklists, and no memory. For 2 traders paid their whole careers to be early to other people's mistakes. Home. They bought in early, including a stake in a derivatives exchange called Deribit. Then they found the flywheel. It worked like this. Borrow Bitcoin. Swap it into a fund called the Grayscale Bitcoin Trust, GBTC, which traded at a premium to the coins inside it. Pledge the shares. Borrow more. Repeat. By June 2020, 3 Arrows was the largest holder of the largest Bitcoin fund on Earth. 38.9 million shares, about $1.24 billion worth. In February 2021, Suju went on a podcast and gave the machine a theology. Bitcoin, he argued, could reach $2.5 million a coin if it swallowed gold's crown. The old rhythm of booms and busts was finished. He called it the Supercycle. How big was the fund by then? Depends who you ask. $3 billion in client money, said one report. $10 billion, said the analysts. $18 billion. And that figure came from the founders themselves, the last size they ever claimed. Here's the number that should stop you. Their Singapore license capped them at 250 million Singapore dollars, 12 to 40 times the ceiling. And from June 2021, a full year before anything broke, Singapore's regulator was quietly investigating. Now, to be fair, for 9 years, lending to 3 Arrows was the best trade in the market. They never missed a payment. Every lender got paid every time for a decade. And that track record is the raw material trust is made of. So the industry shook hands. Genesis, the biggest lender in crypto, handed them $2.36 billion, much of it with no collateral behind it. Voyager, a listed company, lent them more than half of everything it had lent to anyone. One borrower. Nobody demanded a full look at the books. Being Three Arrows was the collateral. The money showed up in the world. A $48.8 million bungalow in Singapore, bought at the very top of the market, held in trust for a 3-year-old. The yacht on order in Italy. An NFT fund co-run with a pseudonym called Vincent Van Gogh. And then, 2 quiet filings. In January 2022, the fund gave Singapore's regulator a false account of who was managing its money. In April, it told the regulator it was leaving Singapore altogether. The paperwork cleared on May the 6th. On May the 7th, the stablecoin under their biggest bet twitched. The bet was called Terra. Its stablecoin, UST, was built to hold $1, propped up by a sister coin called Luna, and by yields of 20% that critics kept calling impossible. Three Arrows didn't hedge that risk. They concentrated it. They put over $200 million into the Token Foundation's giant raise that February. And that was the smaller half of the bet. The bigger half, 10.9 million locked Luna tokens, bought for $559.6 million. On May the 7th, UST slipped to 99 cents. By the 9th, the 80s. By the 12th, Luna wasn't falling. It was evaporating. And the whales moved. That same day, Three Arrows pulled $400 million of staked ether from one trading pool, and Celsius, remember that name, pulled $380 million from the very same pool within hours. The flywheel ran backwards too. GBTC's premium was long gone, and the discount was heading for 34%. The collateral under half the handshakes was shrinking by the week. On May the 27th, Suju typed the closest thing to a confession he's ever produced. Supercycle price thesis was regrettably wrong. So, the locked Luna, $559.6 million of it. What was it worth when the dust settled? Not half, not a tenth. Per on-chain analysis, $670 total. $500 million had become less than one night's mooring fees for their yacht. But the position wasn't the disaster. The disaster was what the position was bought with. Everyone else's money on a handshake. And in June, for the first time in 10 years, a lender asked Three Arrows for its money back. June 2022, told as a stack of dates. June the 15th. Ju tweets, "We are in the process of communicating with relevant parties and fully committed to working this out." Then for 4 weeks, nothing. One of the loudest voices in the industry goes silent. June the 17th, Davies tells the Wall Street Journal the Terra collapse caught us very much off guard. June the 27th, Voyager issues a formal default notice. 15,250 Bitcoin plus $350 million, unpaid, more than half of everything Voyager had lent, gone quiet in one borrower's hands. The same day, a court in the British Virgin Islands orders the fund liquidated. June the 29th. Genesis's chief executive says the quiet part on the record, "We mitigated our losses with a large counterparty who failed to meet a margin call to us. And the last document of the month isn't from a lender at all." June the 30th. Singapore's regulator reprimands the fund, revealing it had been investigating for a year, and that the fund had told it a false story about who controlled its money. Remember the banks? 5 years to withdraw trust, desk by desk. Crypto's lenders did it in 13 days. 5 weeks later, Ju and Davies surfaced by phone from an undisclosed location, lawyers on the line. That's the interview with the sentence from the top of this video. We met all margin calls. You've now seen the default notice. You've heard the lender describe the failed margin call. 2 documents, 1 sentence. Pick. In fairness, Ju also said the truest thing anyone said that summer that Luna's collapse would catalyze a credit squeeze across the industry, his own diagnosis of his own disease. The yacht's handover month was the filing month. Nobody ever boarded. Much wow reads a little differently now. And Davies said one more thing that summer. I have a feeling my next year is planned for me. He was right about the year, and wrong about whose. But before that bill arrived, the industry had to count what 13 days of withdrawn trust had actually broken. Here's the map, lender by lender, drawn honestly because this is exactly where the lazy retellings cheat you. Voyager, dead of three arrows. Its own bankruptcy filing names the default as the trigger. Its customers weren't funds, they were people with an app. Genesis, it sold the pledged GBTC, those 38.9 million flywheel shares, and was still $1.2 billion short. Its parent papered the whole with a 10-year IOU to itself. And when Genesis finally filed for bankruptcy, its papers named two shocks, three arrows, then FTX, BlockFi, an $80 million wound, survivable, that pushed it into a rescue line from FTX. 5 months later, it died of its rescuer. And worst of all, for the story you may have come here expecting. The two biggest collapses on the shelf were not Three Arrows' kills. Celsius froze withdrawals before Three Arrows' failure was even public. The court-appointed examiner ran the autopsy across 476 pages and found Celsius had never been healthy, profitable, functional, or even solvent. Its exposure to Three Arrows? $75 million, around 1% of what it owed customers. Remember May the 12th? Same pool, same hours. They drowned beside each other, not because of each other. And FTX? Its November death was its own fraud, sworn to in court by its own executives. Now, to be fair to Three Arrows, they didn't burn down the whole street. They burned down two houses and singed a third, and they taught every lender on the block to run at the same time. Even Joe conceded the shape of it. It's not a surprise that Celsius, ourselves, these kind of firms, all have problems at the same time. You've probably watched the documentaries about the others. This is the credit event underneath that whole shelf. But that's not the strangest part of this story. The strangest part is that at this point, billions gone, 5 lenders down, the two men at the center simply left, and the people sent to find the money could not find the men. The liquidators arrived at the end of June. The founders didn't. Their location undisclosed. Their reason, in Ju's words, there's so many crazy people in crypto that kind of made death threats or all this kind of noise. On July the 12th, Ju resurfaced online to accuse the liquidators of baiting his word as the pair planned a move to Dubai. What followed was a manhunt conducted entirely in paperwork. A New York bankruptcy judge authorized serving them by Twitter, literally tweeting at them. Singapore's High Court issued a disclosure order in November. Open the books, answer the questions. Then the founding skill came home. Find the counterparty's error, make it pay. Davies had renounced his U.S. citizenship in December 2020 and become Singaporean weeks later. So when a U.S. contempt motion finally landed in August 2023, it failed. Wrong citizen, wrong jurisdiction, service invalid, motion denied. Jurisdictional arbitrage executed as cleanly as the old currency trade. Meanwhile, the reinvention. In April 2023, the pair launched OP&X, an exchange for trading claims on bankrupt crypto companies. Read that twice. Dubai's regulator fined the exchange 10 million dirhams, unpaid at the notice, and each founder 200,000, which they paid. Companies eat the big fines. The men pay the small ones. Davies floated restitution with a condition attached, in his words, a shadow recovery process for creditors, which are early and supporting of the new exchange. Support us, get considered. Singapore was less interested in tweets. On September the 25th, 2023, a court signed committal orders. 4 months prison, each for non-cooperation. 4 days later, a man walked into Changi airport with a ticket out. A quick recap, because the last act moves fast. 2 traders built the most trusted borrowing operation in crypto and ran it at up to 40 times its license. 13 days of margin calls ended it, and the map of what actually died of it is smaller and stranger than the internet remembers. September the 29th, Suju is arrested at Changi airport, boarding a flight out. Davies' feeling had been right. The next year was planned. It just landed on the other man. 4 months for non-cooperation. Notice what the sentence was for. Not for losing $3 billion of other people's money. Nobody's been charged for that, then or since. For declining to answer questions. He served about 3 months, and on release, he reviewed prison like a resort. Very enjoyable. Actually, a very pleasant experience. Lights out at 9:30. No internet, no alcohol, no caffeine. The best sleep of my life. Days before the arrest, the regulator had delivered its own verdict, the civil kind. 9-year prohibition orders. And inside them, the finding this whole episode has been circling. Per MAS, the fund the street believed ran $10 billion had no risk management framework for its crypto book at all. None. The regulator's own words, flagrant disregard of its rules and dereliction of their directors' duties. December 2023. A court in the British Virgin Islands froze up to $1.14 billion of the founder's assets worldwide, Davies' wife included. The liquidators want roughly $1.3 billion from the 2 men personally. Now, to be fair to the founders, one court did take their side once. Ju sat for his examination, and in 2025, Singapore's Court of Appeal threw that examination out because the liquidators had already decided to sue him and hadn't said so. The same judgment called the founders' broader conduct cynical litigation choices. Both things are true. Hold both. So where does it stand as of the date on your screen? Creditors are projected to recover about 46 cents on the dollar. The fund's $1.53 billion claim against EFTX, 3AC is owed nothing, says FTX, is still being fought. Davies' 4 months remain unserved, his whereabouts publicly unknown. And still, no criminal charges, anywhere, ever. The afterlife was short. OPNX was dead by February 2024. Ju's first post after prison was 2 letters, GM, and a token he backs jumped 50% in 20 minutes. And on the 1st of February 2025, he typed, Bitcoin will rise to $188,000 by the end of 2025. Ethereum will rise to 8,888, and SOL will rise to 888. 3 price targets. From the man whose last one ended at $670, rated in his 2021 voice. It's the same sentence. The decade changed everything around him and nothing in him. Here's what you take with you. The industry that promised you'd never have to trust anyone ran, at its center, on 2 men's word. The next system that tells you trust has been abolished. That's where this story starts again. Somewhere behind your money, there is still a borrower nobody questions.